What does the market want? Well, here we are, and the market has gained another bullish week last week, and the market wants more of what it's been getting. And what is that? Well, that's steady economic indicators that sometimes are really a lot better than expected, and even when they're not, they're up slightly. No real negative surprises in some time. The market wants a continued spooking of the bond investors. Interest rates are inching up ever so slightly, and that is driving record flows of money from the bond market to the equity market. There's no place else to go. And so we hit new highs in the Dow again today. The market was a little unsteady this morning. Europe was a little bit back and forth, but before the day was over, everything moved up, and Dow another yet new high, historical high, and the S&P moved within 9 points of its 2007 high. It's going to take a while for NASDAQ to get back to those silly heights of 2000. So where do we expect the market to go? Well, it's the financials, healthcare, technology, and basic materials continue to lead the way. We have very few new economic announcements this week, as well as earnings announcements. The ones we are expecting, the most important of which are retail sales tomorrow. And then on Friday, we have industrial production. A lot of pricing data coming in this week. We don't really expect much there of any scariness. And so it's a week to look for more bargains, and they're still out there. Keep in mind, we're at new highs in all these markets, except for the NASDAQ, and valuations remain moderate. So you can expect it to move higher, barring something catastrophic. So we've got some ideas for you today. Marathon Petroleum it's already up well over 30%, almost 40% this year, but still trading at only 8 times current and forward earnings. Over the half of the analysts continue to revise upward. Projected growth of this year and next year. Well-priced stock at this level. Cooper Tire and Rubber is only trading at 7.5 times earnings. They're expected to be up 105% this quarter. I don't mean the stock, but the earnings, 105% higher than last year. 30% next quarter. Looks like a good entry point for at least a 1-2 month, 2-quarter trade. Genworth, our #1 stock for the year in our Baker's Dozen, is up over 25%, but it's still trading at only 7 times forward earnings. And they got a credit rating increase today, which is exactly what they need for another run on previous highs, which are a long way off. A lot of room to grow here, and credit ratings do wonders for financial firms. Finally, we have Seagate Technology. I'm sure you've heard us talk about it before, but it continues to be at a very attractive price. It's paying a good solid 4% dividend. It has a big cash position. It's a market leader. That's what the market wants.